It's Monday, the 3rd of August. This is me, Bolson Omafaya. We're starting a brand new month with Uchenna Ukadike, who is the consumer goods analyst at Vertiva Capital here in Lagos, Nigeria. Good morning, Chima. Hope you had a great weekend.
Good morning, Bolson. Yes, I did. It was good. Thank you.
Thank you. And let's go all the way to East Coast, where Ali Khan-Sachu is always the rising sun of the Eastern Coast, always from Rich Frontiers Management. Good morning, Ali, CEO and founder.
Morning, boss, and good to be with you.
Hope you all had enjoy your weekend transition to a brand new month. Let's hit the ground running. We have quite a lot to talk about. A very busy week also on economic data, PMIs, inflation data across a number of jurisdictions within the African space. But just checking in how we finished off, a bit of a mix when a few markets like the Egyptian market went with the rest of the Middle East for a long 5-day holiday. The Egyptians are not back until tomorrow as far as the market is concerned. So let's keep that in mind. The last day for trading in Egypt was Wednesday, 0.29%. Ivory Coast was 0.69% on the last trading day. Nigeria finished last week on week basis, 1.09%. Earnings from the banks and big telcos like Airtel Africa and MTN contributed to that, including folks in the consumer goods and industrial goods. Kenya was soft by about 1% on Friday, and South Africa GSE by 0.2%. So let's check in with East Coast, where the Nairobi Securities Exchange is the big mover. But the big news over the weekend was that Kenya Airways and Rwanda Air reopened the airports, and they're resuming flights to a number of destinations within Africa and globally, including the Middle East. Meantime, Kenya Central Bank raised 275 billion shillings via treasury bonds and treasury bills auctions. Kenya public debt now 6.6 trillion at the end of May. By now, 2 months after, the figure would surely must have gone a bit higher than that. Ethiopia is going ahead with the privatization of the national telecommunications company Ethio, but the revenue for the company rose 31% in the period under review ending June, 1.37 billion US dollars. This is one big cash cow for the Ethiopian authorities. Ali, come in here. Let's take a flight.
So let me start with Ethio Telecom. Ethio Telecom saw a big jump in full year revenues, 31%. As you all know, they're looking to sell 40% of the shareholding in Ethio Telecom. A lot of people interested in that asset, knocking on the door that stretches from Vodafone to Vodacom to practically any serious operator. More than 100 million people market, probably one of the last big markets that telecom operators can go after. The one issue I will raise is that Ethiopia, of all the African countries, is in the habit of shutting down its internet the most. It is in the Premier League, top of the league. Obviously, recently, with the assassination of the Oromo singer, was the latest example, but they have a very, very high incidence of that. But overall, this is a jewel in the crown, and a lot of people looking to get involved in that divestment. Kenya Airways and Rwanda Airways both announced the start of international flights to much fanfare. Yesterday I was watching the Twitter stream, and we had not only Kenya Airways land in Nairobi, we had Lufthansa, British Airways. So I think, you know, there's a lot of optimism around that. The positive thing about airlines is it's shown that the incidence of COVID infection on an airplane is actually less than 1%. It's from the statistics I've seen, it's very low. But the challenge is that if you look at somewhere like Kenya, our infection rates are growing very fast. I mean, we're in the top 10 percentile. Ethiopia is the fastest growing in the world, which is ironic, 3.7% per day. But Kenya is in that top 10. So we've got this challenge where we need to open up the economy, but and that's what we're doing. But at the same time, you know, this whole COVID saga remains an uncertainty that has not been resolved as yet. And I saw Emirates with a real kick-ass deal where if you fly on Emirates, you're insured against catching COVID, you get a daily stipend, and they even pay for, God forbid, your funeral. So, you know, our African airlines have got to think out of the box. Those Emirate boys have thought out of the box here. Kenya debt levels, we know, you know, all countries in Africa have been jacking up the debt level as they try and deal with this COVID economic emergency. Ours now is blinking amber, but, you know, it's blinking amber all over the continent right now, in my opinion. And finally, CBK, you know, they've really done a great job at suppressing interest rates in the short term. They're now selling bonds further out the curve. People buying those bonds have a nice carry going because you're getting a much better rate of interest versus the short end. But we're coming to this point in time where, you know, we've got to look at our currencies as well. If we suppress interest rates much more, we're putting a lot of risk on our currencies. And bear in mind, everyone's been talking about the weak dollar. The dollar has been weak against the euro, against G7 currencies. Against emerging market and frontier market currencies, it's been strong. So we've also, I think now, our central bankers have got to start thinking very clearly and weighing the risks of further easing and the risks to the currency that might come out of that.
Interesting scenario there across the Northern African region, including Ethiopia, and touching on currency, which I'm sure Uchenna will look at it for us. It's been a very depressing 2 weeks or so for the greenback. As we continue now to see news coming out of the US, China PMI was strong this morning, manufacturing PMI 51.1, non-manufacturing PMI about 54.2 or thereabout. So China is going red hot. The folks in the US are still politicizing the whole stimulus package, whatever that means. So the fight between the Beijing and Washington has just gone full speed with TikTok. Microsoft says it's going ahead with the plans to purchase the company. Says the deal should be done by mid-September. Quite a lot to wrap our hands around. So Uche, get yourself ready. Ali, also get ready for your Zimbabwean friends. I'm sure they're reopening today, but they're locking out 3 of the biggest companies, Food Mutual and about 2 others. That's a big story there. But let's touch on Nigerian market because I'm interested in how the earnings are coming through for the consumer goods. Uchenna is, Chima is talking to us on that. Very quick one for the West African coast where we are located here. The AFDB over the weekend released a new West Africa Economic Outlook report. We'll be talking about that over the next 2 days. Nigeria's business confidence, according to Central Bank monthly report, shows a rebound to 33.7 in August against a negative about 7 points or so in the month of July, and outlook on September to early next year was a little bit positive on the business confidence side. However, folks are not happy with the direction and the handling of inflation and a few other things. Meantime, UBA, one of Nigeria's largest banks, displayed media reports that the lender is involved in the 41 billion naira NITEL privatization that was about a dozen years ago. Meantime, MTN Nigeria earnings came in EBITDA 8.2%, 327.1 billion. Pre-tax profit was up. Earnings per share down 4.7%. MTN Ghana also reported over the weekend service revenue nearly 20%, EBITDA almost 30%, subscriber base 4.1%. But let's talk to Chima when you come to some of the earnings from Nigerian bureaus. You know, we discussed this 2 weeks ago. There's going to be a bit of a selection when the numbers come out in terms of who is winning within the consumer goods space, who is winning and who is losing. So when we look at Nestle, for example, and we look at Nigerian bureaus earnings were surprisingly in the water. Good morning.
Good morning, Bosin. Thank you. So we are talking about this, like you said, we saw NB results in the brewery sector. We have said that NB is the player with the largest market share, and so we had expected that to play out positively somewhat for the firm. But coming out, we saw that for the quarter on quarter, NB's revenues dropped about 17.4%, which is quite significant. However, it's nothing near where we had expected. We had expected it to be a whole lot worse than what came out. I'm looking through their PAT as well. We saw that it declined almost 98% quarter on quarter. But for the H1 performance, we saw that it was up to about 58% decline, saved by Q1 performance. There's nothing much that has changed in terms of sentiments. The only thing that we see that is different now is the significance or the value of their decline. We had expected that with the current sentiment and the lockdown in Q2 and then the safety measures people were putting in place, we had expected that their demand and revenue would decrease. But I think we have a clearer picture now of the magnitude of the decline. We should see that going forward. We don't expect so much decline to come forward, but we still expect that the company would see declines. One other result we saw for the week was Dank Sugar from the sugar segment. We saw that the company gained about, I think 17% quarter on quarter. The company recognized the revenue of about 55 billion in the quarter, which is very significant. One factor we attribute this feat to is the restriction of smuggled sugar into the country, like we have said before. So we believe that has really helped them in their operations. We also saw that reflect in their bottom line as well, although with elevated cost of sales, given increased cost of raw sugar, we saw that affect them. For Nestle as well, we saw that Nestle grew revenue, quarter on quarter was able to grow revenues. We attribute that to the Ramadan activities in the quarter, even though for the better half of the quarter, we saw that we were on lockdown and we expected that to affect revenues. And going towards profit after tax, we saw that bottom line reduced by about 17% as well. We expect that to continue. We expected Nestle to post a top line increase of about 3% for the full year. But given their H1 run that we've seen that they've reduced top line by about 6% for H1, we expect that even if we see a better performance in Q4, given that should be their best quarter, even when we see that expected good performance, we should still see a decline for full year revenue to about 0.7%.
Okay, so Chima, if you look at Nestle, for example, you think that as we ease more into the third quarter, consumption will continue sales will rise, and that will push revenue a little bit? We're not sure, given the uncertain times given the uncertainty in the environment and in the economy. We've seen that more businesses have come out. People are now out and about. So we do not really say that going down, we should still see worse sentiments or worse revenue performance. However, we still expect that given income declines and income level declines, we should still see that affect the performance of the company. But we hold out hope that maybe by Q4, we may see some good performance for the company. Yes, because I looked through the streets around where I live over the last few days for the Muslim holiday, and the volume of beverages consumption, alcoholic and non-alcoholic beverages consumption was enormous. Stores were open. Folks who are doing retail and wholesale of alcoholic products were in business. Even as of yesterday, which was a Sunday, a lot of folks were open. They opened up their shops and was consumption. So I think perhaps folks are beginning to talk about, look, the pandemic is here, but we've got to live on. We are still among the living. If you're among the living, continue to enjoy yourself, make the best of the life of the moment that you have. Maybe that will help the numbers for the consumer goods space to be a little bit better as we continue to see. And as we move towards the end of the year, you see more festivity period for Muslims or Christians, and all of that will continue. to come through. And if schools perhaps at some level reopen, perhaps we'll see some revenue uptick as well, or sales coming through from consumer sentiments will change. Thank you so much, Uchenna. We're in here this morning. The European banks are reporting worse than expected numbers when it comes to losses. It's not a very pretty good time. We'll talk about currencies earlier. That's what I'm interested in quickly.
Right. So if you monitor these indices, also the counterparts in the US, you will realize that financials are not looking good on the sector base compared to other sectors. And that is really being eaten as a result of what has happened, the lockdown, and that risk that has been permeated into this sector. And that's what we are seeing with this reporting. As you mentioned, with the currency level, should I say the focus that has been for the past 2 weeks, as you rightly mentioned, has been the US dollar. And there's been this talk that the way the US dollar is in this downward momentum, there is the possibility that it might lose its reserves status. The fact is, if you look at what is really on ground, what's the alternative to the US dollar in terms of a reserve currency status, and you will look at it, you will realize that there is really no viable alternative. The euro should come close, but there are too many structural issues that is affecting that. So right now, it's just all, I would like to put it, nonsense talks in terms of the US dollar losing that type of its credibility as a reserve currency status. And that is what people have been trying to see, and that's what is being translated into the market and other currency space. You can see the Ethiopian currency also doing well, the euro also doing well, as opposed to the US dollar. The G10 currencies have really performed better given the downside risk in the US dollar. But if you compare that, as Ali has mentioned, to the emerging market space, and that's why I think we have a bit of leeway emerging and frontier market, because the US dollar has been aggressively selling. However, the economy on this side of the continent, the emerging and frontier market, have really not been so great. So that's, we can't see that really significant downside pressure here. If we start to see some sort of upside momentum, because the squeeze now and speculative sentiment have been highlighting that the US dollar is aggressively in an oversold position, and if we can see some sort of short squeezing in any way, that can see some sort of short-term push up in the bullish momentum in the US dollar, and that is really not going to be so great for emerging and frontier market space.
I'm surprised. Thank you, Uche. I'm surprised, Ali. Where is the Chinese, the dragon, getting this firepower? I saw the PMI this morning, saw the non-manufacturing PMI on Bloomberg, and I'm wondering, what's going on here?
It's a very good question that you're posing, and you know, if you look at it globally, the data that the Chinese are presenting is significantly firmer than anywhere else that you care to mention. I think a lot of it is not organic. It's not actually the private sector. It's not their private sector. It's more government-led. It seems to be pharma, a lot of pharma-related activity. And I think this particular period of the rebound has been manufactured by the government. The question is, for me, is it sustainable? And in an environment where they are so dependent on global trade, and the majority of its trading partners are showing tremendous weakness. We saw the numbers at the end of last week. These were sticker shock numbers out of the US, out of Europe, close to -10% on an annualized basis. I'm questioning whether this rebound in China is sustainable, and that's what I'm asking myself.
Well, I'm asking that question, but again, I look at the Euro area manufacturing report out this morning from Bloomberg, reported that within the last hour, that's also reading much better, 51.8 in July against 51.1 in the month of June. So even though it's a bit of a little, about 7 basis points or so higher, but it looks like the Euro area PMI is also coming back. So it's all talk about is the reopening and easing of the lockdown perhaps has some little benefits that is coming through on the economic side. But let's look at the Southern Africa. The earnings from MTN is making headlines. We saw the one in Nigeria. Over the weekend, MTN Ghana reported the Ghana market. But the headline, earnings per share, we're looking at from the group headquarters in South Africa is an EPS of between 160 to 170%. Interim dividend, there'll be none of that, and that will be discussed. The CEO, Rob Shuter, is leaving for the UK British Telecom Group at the end of March next year, so still a couple of months more. Botswana Telecom says revenue fell 4% to 1.4 billion pula. EBITDA is also down as well. Zimbabwe Stock Exchange opened today, but Old Mutual, PPC, and SCIL are still locked out of that market. Ali, we're in very quickly on the telecom numbers. We talked about Ethio Telecom earlier, but this is MTN here and Botswana Telecom. Before you give us a minute or 30 seconds of your thoughts about the Zimbabwe Stock Exchange.
So let me start with MTN. MTN historically has always had a lot of volatility around its earnings because it operates in very hard to operate markets. And typically there's a lot of FX fluctuations in those results. But a triple-digit headline EPS expansion is something that no one is going to argue with. This is, of course, the best of times for telecom companies because, you know, all of us are consuming more data. All of us are having to communicate more. Your program is an example of the increase in consumption of data. And therefore, these are the sweetest of sweet times for a lot of these telecoms if they get it right. And I think MTN is signaling that they've got a huge franchise and therefore that franchise is beginning to perform. They've had challenges in Nigeria and other places. They're always going to have challenges, but those numbers are signaling some underlying muscle. And I think investors will begin to dive deeper into that. Botswana Telecom minus 4%. You know, Botswana is a small country, population-wise. It'll be interesting to see how that progresses through the year. I'm not sure what precise challenges they had in this reporting period because I would have thought the uptake would have been higher. Let me turn to the Zimbabwe Stock Exchange, of course, which we've spoken about before, which was shut down for a period of time. It's now being reopened. It's an important signal that's got to be sent by the government if they're serious about ever getting in external investors. But it is unfortunate that 3 companies are not going to come back on, one of which is their biggest market cap stock, that's Old Mutual Zimbabwe. They've been unhappy because people have used Old Mutual Zimbabwe as a currency hedge. And that's what they are uncomfortable with. But at the end of the day, you need transparency in markets. And I think here what they're doing is that they're not resolving the underlying issue, which is not Old Mutual Zimbabwe. It's the multiple currency. It's the whole issue around rampant money printing and the devaluation in the value of the Zimbabwean currency. And I don't think you can pin the blame on Old Mutual, though you might want to. Madagascar, that's interesting, $171.9 million. You will remember that President Andry Rajoelina was touting this COVID organic miracle cure, where all our African heads of state were congratulating him and flying planes to buy the stuff. That whole thing was poo-pooed by your Nigerian association who said all it's good for is suppressing a bad cough. They've got rampant takeoff in COVID, unfortunately, and that's why they're getting that request in.
Very interesting development around that made in Madagascar COVID-19 virus. But again, that's a story for another day. But thank you. Let's look at the Northern African market very quickly. I'm going to ask a few questions of Uchenna and Chinma in a few seconds. The North Africans are not back until tomorrow. North African market, Egypt precisely, or Egypt Development Fund got $2.6 million loan facility for COVID-19. Crude oil output, 62,000 barrels per day. Maroc CDM bank net income down 13.64%. That's consistent with a number of what the banks are reporting around the world. Africa Reinsurance is disbursing $3.3 million for COVID-19 support for Africa. That's good news. But let's get back to the Nigerian space debate. I'm asking Chima, what's your take when you look at the business confidence report for Nigeria from the central bank, for example, saying, look, we are more optimistic about the economy moving forward in the month of August to the month of September, coming from a negative reading previously. What do you think will be in there that could provide this kind of a level of a rising optimism rather than very extreme pessimism?
I'm thinking, like I said earlier, if you look around, we see that more businesses are getting opened. We see that many people are no longer, let's say, afraid of contacting the virus. Many people have been indoors for a long time that I think many people are getting tired, and many people don't really understand or believe the importance of really staying indoors. So if you, like you said, if you look around, we'll see that a lot of people are outside, a lot of businesses have been opened, and I think that should be the main driver of business confidence around. Also, we see that with the oil rebound, we see that we have been getting some increased trade revenues and increased positivity from the government in terms of revenue. So I think that has affected the way people see the economy going forward, and they think that that should trickle down into smaller businesses. That, as well as the many grants to be seen for small, micro, and medium enterprises over the past month. I think that is really what is driving increased business confidence in this period.
Thank you, Chima. Uchenna, how much the fight between Beijing and Washington, how much damage do you think this will do to global trade? Or has it all been priced in already? Will anything change, even with the COVID-19, the race for vaccine?
I think right now what we should be looking at or understanding is this is no longer a trade war. We're having a cold war on our hands between Beijing and Washington. It has devolved to that level, right? You can see the attack on TikTok. You can see now WeChat. This is something that is, the Americans are saying we are trying to protect our national security, and Beijing is saying, well, you are literally coming and being aggressive to our sovereignty. So it's no longer, oh, this is just trade war and having tariffs on different goods that are being exchanged by this country. It's more deeper than that. So I don't see any near-term immediate positivity between Washington and Beijing. Maybe the November election and maybe Trump leaves the office for some reason. But that in itself is not. It's not the risk around this is so fluid and dynamic that you can't really have a static approach to it, right? You don't know what can be announced tomorrow. Beijing is always going to say, well, we are going to countermeasure whatever actions the US take against, and we don't exactly know what this can be priced into the market. So yes, I can say there is no exact way to look at this risk. It's just that it is here. It's what market participants are always on the front foot and trying to see what exactly is going to be announced.
Thank you, Uchenna. Ali, 1 minute. What's in this Washington-Beijing face of going political to economic to trade, going down to national security issues, and what have you? What's the need for frontier and emerging markets?
I have to agree with what Uchenna was saying. Is I think that this is going to escalate. It's going to ratchet higher. I saw a description by someone called Neil Fergus calling it a Darwinian standoff. And I think the market is still too complacent about the risks associated with either some flash out in the South China Sea or God knows, I can't predict it. But I believe there's a huge risk now, particularly in the run-up to the election, when Trump wants to look tough and he wants to blame China for the virus. So I think we're going to see that escalate. For frontier and emerging markets, I think it keeps us on the back foot. It means trade does not recover quickly. It means that China kind of tops out at where we are right now, and therefore the risks of negative spillover is very, very high for EM and frontier assets, in my view.
Thank you so much, Ali. We appreciate your time this morning. Ali, the CEO and founder at Rich Frontiers Management in Nairobi. Thank you. Do have a great week ahead. Uchenna Aminu is the managing partner at BlueFX Nigeria. Thank you so much for your views. And of course, Chinma Ukadike, the consumer goods analyst at Vertical Capital Management. Thank you very much. Have a good day, everyone. And bye for now.